This is my analysis on gold, February 2023. I'm a 7-figure trader, but I'm not a financial advisor. I just share what I see. If we look at the monthly chart, we can see a clear upward trend since 1968, but in my opinion, it's not relevant to look that far back. The weekly chart is very interesting. It's clear how the price has reacted in different places. There is a clear bottom, also known as support, where the price bounced 1, 2, 3, 4, 5 times. There's a clear top, also known as resistance, where the price bounced 1, 2 times. This bottom and top create a sideways channel where the price bounces a few times before breaking out of it. The reason I didn't draw the green box lower, which is the lower support, is because there is a number of hits that match if we look to the left, as shown by the green upward arrows. What we see when it broke below the green support box is called liquidity grab. It's not just me who sees this. People are trading buy positions for the bottom and put their stop losses below the green box. I posted an analysis on my TradingView profile on July 7th, 2022, just before these poor people's stop losses were picked up. It was expected. There's a pattern that often repeats on all time frames, and that is impulse, correction, impulse. When the impulse comes from the bottom into a sideways channel or a downward flag, it is more often than not that the price goes upward, and vice versa if it's upside down. Therefore, I believe that in the long term, the price will break up upward above the red box. And by long term, I mean 6 or more months away. It could be a year or 2, but will go up. Until then, my belief is that we will not go below the green box again, and we will hover around here sideways for a while. If we look at a little more short term and zoom in on the 1 hour chart, we actually see 3 impulse correction impulse patterns in a row. The first is the one at the top, and it has an impulse that comes from below up into a slightly upward leaning flag, so we expect the price to come down from it, which it did. The second comes from the impulse upward into a sideways flag, and it's common for the price to continue downward out of the correction, which it also did. The third and last one, that's where we are now, in the middle of the correction phase, that leans slightly upward. And here we come from above and expect to continue downward out of the upward leaning flag. So, short term, we can expect the price to go down. How far is very difficult to say, but if I zoom out to the daily time frame, we also see an upward leaning flag with an impulse from below. And what will happen then? The price will move down. It happens that the price drops all the way down to the beginning of the flag, and that would mean that we are down at 1,730. Exactly how far the price drops, I do not know. And whether it will drop exactly now or whether it will go up a little bit before it drops, I also do not know. But my belief is that the price will still short term go down to 1,800 to 1,730. Then we will see a new technical analysis and whether the price has moved here and if this has been true or not. But in the long term, 6 to 18 months, the price will have broken above the red box. Have a nice one. Peace.